Thanks for joining me. Let's have a look at the stock markets. As I promised you on Friday, I've been talking about stock markets getting primed for a crash. If you haven't seen my video comparing the situation from 2000 dot-com crash and 2007, just before the global financial crisis, have a look at it. I'll put it at the end of this video so you can see the comparisons and why I think this is the final setup before the big move to the downside now. And I'm talking 50% crash. This is now almost 12 months of data going back to the beginning of January, and there is no question, is there, in anyone's mind, that the S&P is in a bear trend. Moving averages confirm it. We're now holding below the 500-day moving average. The green line, we've been doing that for quite a while. Red line is trending down. Blue line, the 100, is trending down, although it has flattened out more recently. Failure to beat the 500-day moving average. Rising wedge pattern, which is bearish. Break to the downside. We did fake up on the CPI number. Long upper wick on that candle. Shooting star candle is a negative candle. Lots of bulls trapped in that day. Everyone who bought into the market believing that was the confirmation of the beginning of a bull trend is now trapped in a losing position, as are anyone else over the past 4 weeks. And we'll have a look at the weekly chart in a minute. So back below the 100-day moving average, we have closed below the 50% fib, which I probably need to redraw in black for you. So you can see that the 78.6% fib held that whole recovery phase. Back down below the 50, heading towards the 61.8, around 38.17. We've broken through, this isn't quite a head and shoulders pattern, but look, we've broken all these lows. These lows really held for a very long time, around 39.12. You remember I had a big support level there and we were buying down there and it did work. And we've broken below it. So clearly this is a sell signal. Let's have a look at the weekly chart. There's a big bull trap. I talked about this on Friday before we'd even closed. Big bull trap here as the market probed higher, made a new high for the week, a new high for that recovery phase over the last month. Here it is. Long upper wick, small red body. So big shooting star candle. Any long position that's still being held within the last 5 weeks is now seriously underwater as we close near the low of the week. That's going to add pressure, I think, when the market opens on a Sunday night, Monday morning. In fact, if you see a gap lower, that's a breakaway gap, and that's another sell signal. Clear bear trend, rejection of trend lines. I've got a longer term trend line on the weekly chart here, going all the way back to 2015, right at the beginning. Nice big trend line, catches a lot of the peaks and also caught the high of this bear trend recovery, this counter trend recovery. Look at where we bounced last time, just around the high of the peak, just before the COVID pandemic crisis hit and the market tanked. So that offered a support level. I don't think it will this time. We've got the 200-week moving average at around 36.50. That looks like an obvious first target. If it holds, okay, then we can talk about maybe the beginning of a bull trend, but I don't think that's going to happen. I think we're going to retest the previous low, which is down at 3,500. I don't really see any reason for that to hold. And we start breaking below 34.50. That's going to be a new leg lower in the bear trend. And we obviously do have a trend of lower lows and lower highs. So it really would not be surprising for us to break 3,500. And that is a full 370 points away from where we are now. And even if we only get that far, we're still talking about what, 10%, who knows, maybe before the end of the year. Look at the monthly chart. You can see really how far this crazy move took us when the pandemic hit and then the central banks let loose with the even more ridiculous money printing and lower rates and everything else, created this huge bubble. So we were actually trading down to the 100-month moving average on that pandemic. In other words, prices returned to normal, if you like, but of course took off with all the artificial money that was being thrown around the system. Now, any reason why we can't return now? I don't see why not. Where is that? 29.75. So I'm looking at 3,000 as a really respectable target, and not that far. We would still be in a bull trend if we got down there. We would still be holding a trend line that goes back to 2011. So that's an 11-year-old trend line. And that's at 3,000. That would be just a decent correction on the monthly chart in a bull trend, buying around 3,000, and then maybe the market can continue to go up. So I'm talking about a 20 to 25% move to the downside, only taking us to the 100-month moving average and a really decent support level in a bull trend. Not even retesting the low from the pandemic, which is down around 2,400, 2,200 area. Now, if we did get that far, and you cannot rule it out, we've got the 200-month moving average down there as well. So that would be a really good support level around the 61.8% fib at 2250. So 2,300, 2,200 is a very realistic target. And that probably sounds ridiculous. I make predictions and I don't get them wrong very often. So could we fall that far? 1,600 points off, that would be another 40% drop. It certainly is very realistic in my opinion. Take us to the lows of 2018, 2019, and it would take us to just above the pandemic low of 2020. Maybe we'll be overshooting to the downside, but that's what markets do, especially in crash conditions when things are as bad as they are. It's perfectly feasible that we could get down that far. Anyway, it certainly is realistic to see us down at 32.25 in the S&P. It's certainly realistic to see us down at 3,000 in the S&P, and it's not out of the question for us to drop 40% and still be in a bull trend. Just put a trend line in. There's a respectable trend line that comes in around 24.25, just above the 61.8% fib. And by the time we get there, that 200-month moving average will probably be up nearer to that area. The low 2000 area looks like a reasonable target. I think I've said enough on that. Any questions, put them in the comments box. I'd love to hear your opinion.